Gary Whitfield slid the folder back across the desk before Tom Reyes had even finished his sentence. "We can't approve this," Gary said, not looking up. "Insufficient collateral, inconsistent income history." "I'm sorry." He wasn't sorry. Tom could tell by the speed of the rejection, the kind of speed that comes from a decision already made before the meeting started. Tom picked up the folder, thanked him for his time, and walked out of Meridian Trust Bank's downtown branch without another word. What Gary Whitfield did not know, because nobody had thought to tell him, and because the paperwork sitting 3 floors above his office had never once crossed his desk, was that the building he worked in, every floor of it, every vault, every loan officer's cubicle, sat on land that Tom Reyes's family had held the mortgage note on for 11 years. Stay with me until the end, because in 9 days Gary Whitfield was going to find out exactly who he'd turned away, and what happened after that would change more than one life in that building. Tom Reyes was 39 years old, and he had learned, over the 6 years since his divorce, that the way people treated you in a waiting room told you almost everything about how they'd treat you at a negotiating table. He wore a plain jacket that didn't announce anything about him. He drove a 10-year-old truck with a cracked windshield he kept meaning to fix. He picked his son Ely up from school every day at 3:15, made dinner most nights, and helped with math homework he privately found more interesting than he let on. Tom's mornings had a rhythm he'd built carefully over the years, the way a person builds something they need to survive on. He woke before Eli, made coffee, packed a lunch with the same quiet attention he'd once given much larger decisions, and sat for 10 minutes at the kitchen table with a legal pad, sketching out whatever small business idea currently held his attention. Most mornings nothing came of it. Some mornings something did. What almost nobody in Tom's daily life knew was that 14 years earlier, before the divorce, before he'd scaled his life down to a modest rented house and a single income built around Eli's schedule, Tom had spent 9 years running commercial real estate acquisitions for a family investment trust his late grandfather had built from a single downtown parking lot in the 1970s. The trust, Reyes Holdings, was quiet by design. It didn't advertise, it didn't put its name on buildings, it bought long-term notes on commercial properties, held them patiently, and let time and location do the work that flashy development deals tried to force. Tom's grandfather, Ernesto Reyes, had arrived in the city with almost nothing, worked as a parking attendant for 11 years, and used every dollar he could save to eventually buy the lot he'd once managed for someone else. He never explained the logic behind it in complicated terms. "Land doesn't panic," he used to tell Tom when Tom was young enough to sit on his knee during Sunday visits. "People panic, land just waits for people to remember what it's worth." Ernesto built the trust slowly, buying notes rather than buildings whenever possible, a philosophy that meant Reyes Holdings rarely appeared as the visible owner of anything, but frequently held the paper that mattered most when a building changed hands, refinanced, or came up for its periodic rate review. One of those notes, purchased 11 years earlier during a period of aggressive expansion under Tom's father, who briefly ran the trust before a heart condition forced his own retirement, was the mortgage on a 6-story office building in the financial district, the building that now housed the downtown branch of Meridian Trust Bank on its ground floor, and 4 floors of Meridian's regional loan operations above it. Tom had stepped back from active involvement in Reyes Holdings after the divorce, handing day-to-day decisions to a small trust management firm, while he rebuilt a quieter life around raising Eli. He still held majority beneficial ownership. He still received the quarterly reports, usually skimming them at the kitchen table after Eli went to bed, more out of a sense of obligation to his grandfather's memory than genuine engagement. He simply hadn't needed to think about any of it in years because the whole point of the structure his grandfather had built was that it didn't require constant attention to keep working. It was designed deliberately to run without him. He needed a loan now for an unrelated reason entirely, a modest business venture, a small logistics consulting operation he wanted to start from the house, requiring $40,000 in startup capital that had nothing to do with the trust and everything to do with wanting to build something of his own, separate from a family legacy he'd never fully claimed as his identity. He had spent 18 months developing relationships with 3 regional shipping companies who needed exactly the kind of route optimization and vendor negotiation expertise Tom had quietly built during his years at Reyes Holdings, one time quietly built during his years at Reyes Holdings, skills that had nothing to do with the trust's ownership structure and everything to do with the analytical mind Tom had always had, whether or not anyone had noticed it. He walked into Meridian Trust as an ordinary applicant, because as far as the loan process was concerned, that's exactly what he was. He wore the same plain jacket. He carried a folder with 2 years of tax returns, a business plan he'd revised 11 times, and letters of intent from 2 of the 3 shipping companies. He did not think even once, walking through the revolving door into the marble lobby, about the fact that his family's trust held the mortgage on the building he was standing in. It genuinely had not occurred to him. The kind of thing rarely does when you've spent years deliberately building a life around not thinking about it. Gary Whitfield was 46, a senior loan officer who had worked at Meridian Trust for 11 years and had developed in that time an efficient and largely accurate instinct for separating strong applications from weak ones. He was by most measures good at his job. He closed more loans than he declined. He had a reputation among his colleagues as fair, if brisk, and among the branch's leadership as reliable in a way that made him a natural candidate for promotion whenever the regional manager position eventually opened up. Gary had his own reasons for moving fast through applications that week. His daughter Maya, 16, had just started her junior year at a competitive private school Gary and his wife had stretched their budget to afford, betting on the idea that the opportunity was worth the sacrifice. Gary had picked up 2 additional evening consultations that week to help cover a tuition payment, and he was, if he was honest with himself, running on less patience and less sleep than usual. None of that showed in his manner. Gary was professional to a fault, the kind of professional that can look from the outside indistinguishable from carelessness because both produce the same efficient, unbothered exterior. Most of the time Gary's instincts served the bank well. It also meant Gary had learned to move fast, and moving fast sometimes meant reading a folder for the details that confirmed a snap judgment rather than the details that might complicate it. He had a private rule of thumb, one he'd never said out loud to anyone, that he could usually tell within the first page of an application whether it would ultimately be approved. He was right often enough that the rule had calcified into something closer to certainty than instinct. Tom's application showed a modest self-reported freelance consulting income for the past 2 years, a period during which he deliberately kept his finances simple and unremarkable while focused on Eli. It did not show, because Tom hadn't listed it, out of habit and privacy rather than deception, his beneficial ownership stake in Reyes Holdings, a fact so separate from his daily financial life that it genuinely hadn't occurred to him as relevant to a $40,000 consulting loan. The letters of intent from the shipping companies sat in the folder too, but Gary, moving quickly through what he'd already mentally filed as a borderline application, gave them a cursory glance rather than the careful read they deserved. Gary looked at 2 years of modest, inconsistent freelance income, a debt-to-income ratio that looked thin on paper, and a request for capital with no established business track record behind it. To Gary it looked exactly like dozens of applications he saw every month from people whose ambitions outpaced their documented financial reality. He had learned, or believed he had learned, to recognize the pattern quickly. Earnest, well-intentioned, underprepared. "We can't approve this," Gary said, sliding the folder back. "Insufficient collateral. Inconsistent income history. I'm sorry." Tom didn't argue. He'd learned a long time ago that arguing with a decision already made rarely changed the decision, it just extended the discomfort of hearing it. He picked up the folder, thanked Gary for his time and stood to leave. What stayed with him wasn't the rejection itself. He'd been rejected by banks before, in the ordinary way people are, back when he was younger and building things for the first time. What stayed with him was a small, almost involuntary comment Gary made as Tom stood to leave, not cruel, just careless, the kind of thing said without registering the person it landed on. "Maybe try somewhere with more flexible standards," Gary said, already reaching for the next folder on his desk. "This branch handles a certain caliber of client." Tom paused for half a second at the door. He thought briefly about saying something, not about the trust, which genuinely hadn't crossed his mind, but simply about the dismissiveness of the comment, the way it assumed something about him that wasn't true. He decided against it. He had learned since the divorce to conserve his energy for the things that actually mattered, and a stranger's careless comment in a bank lobby rarely qualified. He walked out, got in his truck and drove to pick up Eli. Meridian Trust's downtown branch occupied the ground floor and mezzanine of a 6-story building at 4th and Larkin, a solid, unremarkable structure built in the early 1980s, brick and glass, the kind of building that most people who worked in it never once thought about as a physical asset with its own financial history. Above the branch, 4 floors housed Meridian's regional loan operations, nearly 200 employees who processed, reviewed and approved lending decisions across a dozen branches in the metropolitan area. The building was owned, on paper, by a holding entity called Larkin Properties LLC, a name that appeared on lease documents and tax filings, the kind of name employees glanced past without curiosity, the way people glance past the name of a printer manufacturer on the side of a copy machine. Larkin Properties LLC was, in practice, a shell entity Reyes Holdings used to hold title on properties where it carried the mortgage note directly rather than acting purely as a lender to a third-party owner. A structure Ernesto Reyes had set up decades earlier for tax efficiency, and one that meant, functionally, Reyes Holdings was both landlord and lender on the building, collecting rent through the LLC and interest through the note, a doubled position that made the property one of the trust's most stable long-term holdings. None of this was secret exactly, it was all filed, disclosed, entirely legal and unremarkable in the world of commercial real estate finance. It simply wasn't the kind of thing that came up in casual conversation, and Gary Whitfield, like most of his 200 colleagues in that building, had never had a reason to look into who ultimately held the paper on the building he worked in every day. Buildings to most employees are just buildings. Nobody wonders who's behind the walls until something forces the question into the open. 3 days later, Tom's trust management firm, a small, disciplined operation run by a woman named Alicia Farrow who had managed Reyes Holdings' portfolio for the past 6 years, ever since Tom stepped back, called for their routine quarterly check-in. Alicia was meticulous in a way that matched the trust's founding philosophy, someone Tom had inherited along with the business, and someone he'd come to trust precisely because she never once tried to pull him back into more involvement than he wanted. Among the items on the agenda was a note coming up for its scheduled 5-year rate review, the mortgage on the 6-story office building at 4th and Larkin, currently occupied primarily by Meridian Trust Bank's regional operations. Alicia walked through it the way she walked through every item, with the same even professional tone, whether the topic was a $40 million note or a routine maintenance dispute. Tom, half listening while making Eli's lunch for the next day, asked, almost as an afterthought, Meridian Trust, is that the branch downtown on 4th? That's the one, Alicia said. Regional headquarters for their loan operations division actually. Good stable tenant. Rate review is a formality at this point. The relationship's been solid for 11 years. No late payments, no disputes worth mentioning. Tom was quiet for a moment, a piece of bread suspended halfway to the peanut butter jar. I was just in that building, he said, 3 days ago. Alicia, who managed the trust's paperwork but had no reason to track Tom's personal errands, asked why, more out of polite curiosity than any sense that it mattered. Tom told her briefly about the loan application, about Gary Whitfield, about the comment on his way out the door. He didn't ask her to do anything about it. It genuinely hadn't occurred to him yet that there was anything to do. He mentioned it the way a person mentions any small, mildly irritating coincidence, worth a sentence not a plan. Alicia, however, made a note. Not because she intended to intervene. Reyes Holdings had a strict policy, one Tom's grandfather had established decades earlier and Tom's father had maintained through his own tenure, against ever using the trust's leverage over a tenant to influence unrelated personal or business matters. Ernesto had written the policy himself, in language that had survived 3 transitions of leadership. *, we do not use the note as a weapon. The note is patience, not power. Anyone who forgets the difference has already lost what made this family's money worth having. But Alicia found the coincidence striking enough to mention it in the quarterly summary she prepared, almost as a footnote, for Tom's review, as a matter of transparency rather than strategy. 9 days after Tom's loan denial, Meridian Trust's regional facilities director, a man named Carl Foss, and their outside counsel arrived for the scheduled 5-year rate review meeting with Reyes Holdings management firm, a routine, unremarkable meeting that happened every 5 years as a matter of course, typically resulting in a modest, mutually agreed rate adjustment reflecting current market conditions. Carl Foss had held his position for 9 years, long enough to have sat through the previous rate review with a different Reyes Holdings representative, and long enough to know that these meetings were rarely eventful. He came prepared with market comparables, maintenance records, and a mild expectation of a routine 40-minute conversation before lunch. Alicia ran the meeting professionally, exactly as she ran every meeting, walking through standard adjustments, confirming continued occupancy terms, addressing minor maintenance responsibilities outlined in the lease, a recurring issue with the parking garage ventilation system, a request from Meridian's facilities team for updated fire suppression documentation. Near the end, as a matter of transparency required by the trust's disclosure policies, she noted a change in beneficial ownership reporting, a standard line item required whenever a beneficiary's personal financial activity intersected, even coincidentally, with a tenant relationship. Tom Reyes, primary beneficiary of Reyes Holdings, had recently had direct contact with the tenant's downtown branch in an unrelated personal capacity. Carl Foss, mildly curious, asked what she meant, expecting something administrative and forgettable. Alicia explained, carefully, factually, without editorializing, that Mr. Reyes had applied for a small business loan at the branch located in the building Reyes Holdings held the mortgage on, and that the application had been denied by a loan officer named Gary Whitfield. Carl went very still for a moment, his pen hovering over his notepad without completing whatever word he'd been writing. He knew, in the way that facilities directors know the financial architecture of the properties they manage, exactly what it meant for the majority beneficial owner of your landlord's trust to have walked into your own branch and been turned away by name. He also knew, from 9 years managing this particular relationship, that Reyes Holdings had never once in his experience used that position to pressure Meridian on anything. Which made this stranger not more threatening, but somehow more consequential, a genuine accident, the kind that organizations handle badly not because anyone acted in bad faith, but because nobody had a protocol for it. He did not say much in the meeting. He thanked Alicia, confirmed the standard rate adjustment, gathered his materials with slightly less composure than he'd arrived with, and left. Carl Foss called Meridian Trust's regional vice president, a woman named Denise Okafor, the moment he got back to his car, sitting in the parking garage with the engine off, phone pressed to his ear, working through exactly how to frame what he'd learned. Denise Okafor was 52, a 26-year veteran of the bank who had risen through retail and commercial lending before moving into regional oversight. She had a reputation earned over decades for being direct without being harsh, someone who dealt with problems by naming them plainly rather than managing around them. Carl explained what he'd learned in language careful enough to avoid sounding alarmist but direct enough that Denise understood immediately. Say that again, Denise said, slowly. Carl said it again. Denise was quiet for a long moment on the other end of the line, the particular silence of someone recalculating a situation from the ground up. Do we know if Gary knew who he was talking to? Denise asked. No indication he did, Carl said. This isn't malice. This looks like an ordinary decline that happened to land on the wrong desk. And the FAR. That doesn't make it less of a problem, Denise said. It makes it a different kind of problem. Denise pulled Gary Whitfield's loan file for Tom Reyes within the hour, reading through it at her desk with the door closed, something her assistant noted as unusual enough to mention to a colleague later that afternoon. She read it twice. There was nothing improper in the decision itself. The application, taken at face value, genuinely did show thin documented income and no established collateral. Gary hadn't done anything against policy. He'd simply had no way of knowing, and no reason to ask, whether the modest, unremarkable folder in front of him belonged to someone whose family trust held the note on the building he worked in. Denise didn't call this a crisis. It wasn't a crisis. Reyes Holdings had never once in 11 years used its position as landlord to pressure Meridian on unrelated business matters, and nothing in Alicia's disclosure suggested that was about to change. But Denise understood, with the clarity of someone who had spent 2 decades in banking relationships, that this was exactly the kind of situation where the right response mattered far more than the underlying facts did. A landlord's beneficiary being turned away carelessly by a tenant employee was at minimum a relationship risk. At worst, handled badly, it could look like exactly the kind of institutional arrogance that made national news for the wrong reasons. She called Gary into her office the next morning, deliberately choosing to handle it herself rather than routing it through Gary's direct branch manager, a decision that would matter later for reasons Denise didn't yet anticipate. Gary Whitfield sat across from Denise Okafor's desk, uncertain why he'd been called in, running through recent decisions in his head for anything that might warrant executive attention. He'd had a good month, by his own accounting, closed 4 solid loans, only declined the ones that genuinely didn't qualify. He couldn't immediately place what this might be about. "Do you remember a loan application, about 10 days ago, from a Thomas Reyes?" Denise asked. Gary thought for a moment, running through the week's applications in his memory. "I remember denying something like that. Thin income history, no real collateral, standard decline." "Do you know who Thomas Reyes is?" Gary shook his head slowly, sensing the shape of a problem he hadn't seen coming, the particular unease of a competent person realizing they'd missed something without yet knowing what. "Should I?" Denise explained, plainly without drama, the way she explained most difficult things. "Reyes Holdings. The building's mortgage note. 11 years of tenancy under a structure Gary had never once had reason to learn about, the quarterly rate review meeting 3 days earlier, and Alicia Farrow's routine disclosure note, mentioned almost as an afterthought in a meeting about parking garage ventilation. Gary sat very still. He thought back to the meeting, the folder, the quick read, the practiced rejection line he'd used dozens of times that month alone, the comment about flexible standards he'd made without really looking up. He hadn't been cruel on purpose. He'd been fast, in a job that rewarded fast decisions, and speed had cost him the 2 seconds it would have taken to ask a single follow-up question about the letters of intent he'd barely glanced at. "I didn't know," Gary said. And it came out quieter than he intended. "I believe you," Denise said. "But you didn't ask either, and in a decision this size for someone walking in off the street with no context, that's on us, not just on him. I've read the file, Gary. The letters of intent from the shipping companies weren't nothing. You gave them 10 seconds. Gary didn't argue. He had in fact given them roughly 10 seconds, and hearing the number said aloud landed harder than a vaguer accusation would have. "What happens now?" Gary asked. "That depends on what you want to happen," Denise said. "This isn't a termination conversation, if that's what you're bracing for. It's a conversation about how we fix this properly, and whether you're willing to be part of fixing it, rather than just hoping it quietly resolves itself." Gary exhaled slowly. "I want to fix it," he said, "properly, not because of who he is. Because I did the job wrong, and I'd rather know that than not." Denise studied him for a moment, the same careful read she'd give a borderline application herself, and decided she believed him. Denise arranged a follow-up meeting, not framed as a favor or a correction of the loan itself, but as what she called it directly to Tom on the phone, an apology and a proper review, done the way it should have been done the first time. Tom hadn't expected the call. He almost declined the meeting. He'd already moved on, mentally, to exploring a credit union for the consulting loan, and had in fact already submitted a preliminary application there 2 days earlier. But Alicia mentioned gently when Tom told her about the invitation, that it might be worth attending, if only to see how the bank chose to handle it. "It tells you something about an institution," Alicia said, "how they behave when they've been caught making a mistake nobody would have known about if you hadn't happened to walk through the wrong door." Tom walked into the same branch 9 days after his first visit, Eli's school pickup rescheduled with a neighbor for the afternoon, this time to a conference room upstairs rather than Gary's cubicle. Denise was there. So was Gary, standing when Tom entered, which told Tom, immediately, that something had shifted. People who are managing a problem rather than owning it rarely stand. "Mr. One Pupicus Rebelviers. Reyes," Gary said, "I denied your application 10 days ago without knowing who you were, and I want to be clear, that shouldn't have mattered. My decision should have been about the merits of the loan application evaluated properly, not a rushed read that missed context I should have asked for. I'm not apologizing because of the building. I'm apologizing because I did my job carelessly, and you're not the only applicant that week I probably did that to." Tom appreciated the specificity of it. Gary hadn't reached for the easy version of the apology, the one that would have made the moment about the mortgage instead of about the actual mistake. It was in its way the exact opposite of the 90-second dismissal Tom had received 10 days earlier, and Tom noticed the difference the way he noticed most things, quietly, without saying so directly. "I appreciate that," Tom said. "For what it's worth, I wasn't planning on doing anything about it. I didn't even know Reyes Holdings held this building's note until my trust manager mentioned it during our quarterly call. It genuinely hadn't crossed my mind walking in here." "That almost makes it worse," Denise said with a small wry note in her voice. "We nearly lost a good relationship over a mistake nobody would have caught if you hadn't happened to walk through the wrong door for an unrelated $40,000 loan." "I don't think of it as a relationship you nearly lost," Tom said. "Reyes Holdings has never once used the note as leverage in 11 years, and that's not going to change over a rejected loan application." My grandfather built the trust on the idea that the note is patience not power. I'm not here to collect on a debt you don't owe me. Denise nodded slowly, recognizing, in that sentence, exactly the kind of restraint that made some landlords worth having and others worth dreading. Denise offered to reopen the loan application with a full, proper underwriting review, taking into account context Gary's initial read had missed, including, if Tom chose to disclose it, the trust holdings that demonstrated financial stability far beyond what the original folder suggested. Tom considered it, then asked for something narrower. Review the application on its actual merits, without the trust in the file at all, he said. I want to know if a fair, careful read of the real financials would have approved it. If it wouldn't have, I'd rather know that honestly than get approved because of who my grandfather was. That's not the business I'm trying to build. Denise agreed and had a different underwriter, someone with no knowledge of the building's ownership, a careful, unhurried loan officer named Priscilla Nunez who had a reputation for the opposite of Gary's efficiency, conduct a full second review. Priscilla spent nearly 2 hours with the file, called both shipping companies directly to confirm the letters of intent, and asked Tom 3 follow-up questions about his consulting pipeline that Gary had never thought to ask. The application properly assessed, with genuine attention paid to the actual business case rather than a quick read of 2 years of deliberately modest freelance income, qualified comfortably, on its own merits, with no reference to the trust at all. Tom's one other request had nothing to do with money. He asked that Meridian implement a policy requiring loan officers to schedule a short follow-up call before finalizing any denial on a borderline application, not to overturn declines, 1A to further 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 declines, but to make sure no applicant was rejected purely because nobody asked the one question that might have changed the picture. That's not about me, Tom said. That's about the next person who walks in with a thin folder and a real story nobody bothered to ask about. I got lucky that my trust manager happened to mention this in a routine call. Most people who get turned away carelessly never find out it was careless, they just believe the bank knows something about them that isn't true. Denise implemented the policy within the month, formalizing it as a mandatory step for any application declined primarily on the basis of income inconsistency or thin documentation, rather than a clear disqualifying factor like an active bankruptcy or fraud flag. She named it, informally, in the internal training materials, the follow-up question, without ever explaining its origin to the wider staff. That evening, Gary drove home later than usual, the conversation with Denise and the meeting with Tom sitting heavier on him than he expected.
His daughter Maya was at the kitchen table doing homework when he came in, and she looked up at him with the particular perceptiveness of a 16-year-old who has learned to read her father's moods from the sound of his keys hitting the counter. "Bad day?" Maya asked.
Gary sat down across from her, loosened his tie, and uncharacteristically told her about it. Not the details of the mortgage or the trust, but the shape of the mistake. I made a decision fast, about someone I didn't take the time to actually understand, he said. It turned out fine, mostly by luck, but it could have gone a lot worse, and it was still wrong, even though it turned out fine. Maya considered this with the seriousness teenagers reserve for the rare moments their parents actually talk to them like adults. Is that why you're always telling me to slow down on the SAT reading section? She asked. Read the whole question before you answer it. Gary almost laughed, surprised by the connection. Yeah, he said, exactly that, just with bigger consequences than a test score. It was a small moment, not one that changed anything structurally, but it stayed with Gary in a way that reinforced, more than Denise's conversation had, exactly why the mistake mattered. He thought about his own daughter 16 and trying hard, and about how much it would cost her, someday, to be read quickly and dismissed by someone who never bothered to ask a second question. Tom's consulting business launched with the $40,000, operating out of a small office he rented 2 blocks from Eli's school so he could still make the 3:15 pickup most days. He never mentioned Reyes Holdings to any of his early clients. It wasn't relevant to the work, and he'd built a life, deliberately, around being known for what he did rather than what his family had built before him. Within the first 2 months he'd signed contracts with all 3 shipping companies he'd originally listed as prospects, and a 4th had reached out after hearing about his work through the same tight-knit regional logistics network that had brought him the first 3. Gary Whitfield, for his part, asked to sit in on a training session Denise put together for loan officers across the region, not as a punishment, but at his own request. He talked through what had happened, without naming Tom specifically, and made the same point to a room of loan officers that he'd made to Denise weeks earlier. It's not about being suspicious of every applicant, Gary told the room. It's about remembering that a thin folder usually means a thin picture, not a thin person. Ask the question. It costs you 90 seconds, not asking cost me a lot more than that. He paused, glancing briefly at the letters of intent example Denise had anonymized and included in the training slide. The information that would have changed my decision was sitting 3 pages into the folder. I just didn't get there, because I'd already decided what I was going to find. The training session became a recurring part of the branch's quarterly onboarding, informally credited among the loan officers who knew the fuller story, when it a mask, to the Reyes situation, a phrase that eventually lost its specific meaning and simply became shorthand for slowing down on borderline applications. On a Thursday afternoon in early autumn, Tom stopped by the downtown branch to make a routine deposit for his new business account, Eli in tow after school, backpack still on. Gary spotted him at the counter and came over, not with the practiced efficiency of a man managing a line, but with the more careful attention of someone who had learned something and wanted it to show. "How's the business going?" Gary asked. "Good," Tom said. "Busier than I expected. We picked up a fourth client last week." Eli tugged at Tom's sleeve, holding up a drawing he'd made in the waiting area, a lopsided building with too many windows. "I drew the bank," Eli announced, with the particular pride of a 7-year-old presenting serious work. Gary crouched down to look at it properly, the way a person looks at something when they actually want to see it, not just acknowledge it. "That's a great bank," he said, and meant it. "You got the windows right. There's exactly this many, I think." Eli beamed and immediately began explaining, in significant unnecessary detail, which window belonged to which floor, an explanation neither Tom nor Gary fully followed but both listened to completely. Tom watched the exchange for a moment, then signed his deposit slip, took Eli's hand, and walked out into the late afternoon light, not as the majority beneficiary of a trust that owned the building behind him, and not as the applicant who'd been turned away 9 days into a story neither he nor Gary had expected to matter this much. Just as a father picking up his son, walking toward whatever came next. Behind them, inside the branch, Gary went back to his desk, pulled the next folder from the stack, and, before reading a single line of it, paused for exactly one extra breath before opening it, a small, private habit that had nothing to do with policy, and everything to do with a lesson that had cost him almost nothing to learn the easy way, and could have cost someone else everything if it had gone differently. If this story meant something to you, that's exactly why this channel exists, real grounded stories about the people who get underestimated, and what happens when someone finally takes the time to look closer. If you want more stories like this one, hit subscribe so you don't miss the next one, and drop a comment below telling us which part hit you hardest. We read every single one. And if you're new here, welcome. There are dozens more stories just like this waiting for you. Thanks for watching, and we'll see you in the next one.